How's it going, fellow traders? It's Magic Trader here. Merry Christmas to everybody watching this video. It's December 6 now? December 26th, day after Christmas, and this is the CFTC report for December 19, 2017. So, this is a snapshot of the positions that the institutions were holding as of December 19. So let's take a look now deeper into each of the majors, including gold and oil, and see what the institutions were doing leading into Christmas. All right. Okay, so here we go. Gold. We see that on December 19 they had 197,000 long positions, which was a significant drop from the 287,000 that they had back in November 18. So what we know is that when the institutions reach exposure to the long side in the 80s, we typically see some profit taking happen. Okay, so we see it back here, and again we see it here. And this time, 79% were here, profit taking, and here was up here. Okay, so when they are so exposed to the long side, there's really not much more that they could add to their long, so they close those long positions for profits, which causes price to drop. So we're sitting deeper within this non-2-to-1 monthly demand zone. We've been in here for quite some time now. And we're also falling short of hitting this weekly area of demand nested within this monthly area. And we saw a really nice push here. Last week. But this data concerns this consolidation candle here on the weekly chart. So as price was consolidating down here at the lows, we see that they took a lot off of their long positions from 287,000 to 197,000. And in the meantime, what have they done with their shorts? They pretty much added some short, right? From 62 to 83 is basically what ended up happening. And that would make sense because we see a drop in price. So they were closing long positions for profits and they were adding shorts, which caused the price to drop. So I think there's a good chance that we start to see them building up long positions again from this area. I think there's a good chance. It's not guaranteed that it's going to happen, but I think there's a really good chance. Right now we're testing the underside of this weekly descending trend line. So what I'd like to see happen is I'd like to see price drop and then break through that trend line. And if that happens and we start to see longs building up again, then this will be a nice setup for taking long positions and taking profits here at this weekly opposing supply zone, because that is a legitimate weekly supply zone, and I do expect price is going to react to the downside from there. Ready? So let's take a look at oil. So with oil, what do we see? We see that long positions slightly close from 761,000 to 749,000, and that came as price was consolidating here. And short positions increased very slight increase, but overall shorts are cooled off, longs are aggressive. And what did we end up seeing this past week? We saw a nice push upwards in price right here. Last week's candle pushing deeper within that poorly formed weekly supply area. So a couple things could be happening here. Even though they're very overexposed on the long side here, we're at 84% long exposure. Even though we're very much overexposed here, what could be happening is we see price break through the supply and then they close off their long positions, causing price to reverse, and then they get back into their long positions again. So we could see that in the making right now. It's early to say, but I don't have any open trades right now on oil, but I'm waiting to see if that's what's going to happen. Right now, price is way too high to be buying, and since I last checked on the markets, it looks like price is just continuing to push to the upside. So I'm not looking to take any trades right now. I'm waiting for a nice pullback for me to get in long, and I think that will happen. We just have to wait for them to take profits on these long positions. All right, these high numbers tell us they're in long, and if we get in long now, we're late to the party. We got to get in when numbers are like this. These are the numbers that we want to be looking for when we want to get in. All right, low numbers. Okay, so let's take a look at the US dollar. What do we see with the US dollar? We see that longs were increased by about 2K, 24 to 26,000. In the meantime, shorts were decreased from 30,000 to 22,000, and this came as we consolidated right here on the weekly chart. So we have a candle of consolidation. Short positions dropped from 30,000 positions to 22,000 positions, and in the meantime, longs increased by about 2,000. So right now, long exposure is sitting at 54%, and net positions actually switched from a negative number to a positive 3.8 thousand. But bottom line is, since June, the sentiment here has been bearish, right? And according to my little arrows here, my bias is we get a move to the downside until we get down here, and then a very good possibility of seeing longer term move to the upside. But right now, in terms of technical formations, there's really nothing to trade off of here. The charts are very messy. The data is not the clearest. So I'm not taking any trades off of this chart anytime soon. Okay, so Aussie, a big decrease from long positions, 93,000 to 38,000. This could have something to do with options expiry, so I'm not really going to take this information too seriously. Take a look. 64% long exposure down to 43% in 1 week. That doesn't make any sense, right? So we see that it's attacking this weekly area supply. Looks like it's going to break. And if you take a look at this chart and you take a look at gold, and they're two very much correlated, this is like a perfect opportunity for longs. In my opinion, all we need is this supply out, and there's nothing else to stop price from heading higher. So I'm waiting for that to happen, and I really want to see next week's data, because this didn't really show me anything. Alright, but I am expecting that to be taken out. If it's not taken out, I'll be completely shocked, but I'm expecting that that's going to happen. Okay, so let's go to US CAD. We see an increase in longs from 20 to 22,000. We also see a nice increase in shorts from 62,000 to 68,000. That came as we consolidated here, and then we did end up seeing a nice drop in price. So short exposure is sitting at 65%, and net positions is a negative 45,000. So I am expecting a move to the upside. I mean, the technicals suggest that we're going to see a move to the upside, but since this bearish formation started to form, it looks like there's a very good chance that we can see a continued move down to the downside here. Especially if the US dollar does start coming through and start to drop, definitely see a move to the downside. But right now, the technicals are very difficult. There's no trades for me here. We got a 3-month area of demand in control, and a weekly supply imbalance in control. Only thing is that this monthly 20 EMA with the monthly downtrend is being hit and reacting, so we could see a move to the downside. But again, technicals are very messy, so I'm not looking to take any trades on this chart anytime soon. US Swiss franc, So longs remain aggressive. Shorts become aggressive this past week with an increase from 19,000 to 29,000. That comes as this candle consolidated here. Again, monthly supply is in control. So monthly supply dictates everything. So the idea is we're going to see a move to the downside. We're reacting to the upside right now because we got a weekly area of demand in control, which pushed price up, but I am expecting a longer term move to the downside. So shorts increasing could be the first signs of them trying to fill in some short positions to get ready for that move to the downside. Not looking to take any trades as of yet. Okay, so what do we have here with the euro? We see that longs dropped from 206,000 to 198,000. At the same time, shorts increased from 92,000 to 112,000. The net effect is long exposure dropped from 69% to 64%. This came as we consolidated here on the weekly chart, and we can see that last week we got a push to the upside. So these are good numbers. 64% exposure to the long side are good numbers to see a bigger push to the upside, right? Because we typically see 80%. When price gets to the 80% range is when they start taking some serious profits on those positions. So we're only in the 60s right now, so we got room to move into the 70s, the 75s, 80s. So definitely could see a move to the upside. That's what I'm expecting, is a move like that. But right now there is no trades because we are falling short of hitting this weekly area of demand, which I would have taken long trades from, but we're falling short of hitting that area, so I'm not looking to take any trades on this pair. And pound US dollar, we see a decrease in longs from 82,000 to 77,000, but we also see a major decrease in shorts from 71,000 to 56. So let's take a look here. Over the last 3 weeks, a decline from 82,000 to 56,000 positions short, and a slight decrease in longs. Excuse me. So we got long exposure at 58%, which leaves lots of room to the upside, but messy chart. You know, we're reacting from weekly supply formation here, weekly supply structure. So we don't know how far this can drop, right? So I'm waiting for new areas of demand to be created, and then I'll take positions. Biases to the upside, and it's been that way officially since September. But we've known that since these very lows here. So waiting on this one for clear areas of new demand to be formed for me to get in long. US dollar, Japanese yen. Longs increase from 145,000 to 151,000, and at the same time, shorts increase from 31,000 to 36,000. Net effect is long exposure drops from the 82% that we were at last week to the 80% that we are at this week. Net positions remains at about 114,000. We are at a weekly area of supply. Last time price was exposed to the long side in the 80s, we saw some profit taking, and I'm expecting to see the same thing here on this chart. Not looking to take any trades just yet. Kiwi, we see a decrease in longs from 23,000 to 19,000, and we also see a slight decrease in shorts from 37,000 to 36,000. Short exposure 65%. The last time we were at 65% was back in May here, and we saw a move to the upside. We are seeing a move to the upside here, but there is a weekly area of supply nested within a monthly area of supply. So I'm expecting price momentum to shift and a move to the downside. Okay, so that's pretty much it for all the majors and for gold and oil. I hope you had a great Christmas with your family, and until next week, take it easy.